Thank you. It's a pleasure to be here. The question we're trying to address is, do carbon taxes motivate emissions abatement in the European Union? My co-author on this work is John Perkins. Climate change, possibly the defining issue of our time, and it has significant economic and societal impact. Attempts to mitigate climate change often focus on reducing greenhouse gas emissions because of the impact of greenhouse gas emissions on climate change. Carbon dioxide is the largest component of greenhouse gas emissions, and carbon is approximately 62% of our emissions from developed countries. Reducing carbon emissions is therefore critically important. We know that business activities are a key to reducing greenhouse gas emissions because businesses are responsible for the majority of these emissions. A key policy initiative is carbon taxes. The link between climate change initiatives, policy to motivate corporate actions, and corporate taxation is therefore an important research topic, and the results of this research should have important implications for policy. While there have been modeling studies that predict the theoretical impact of energy taxation, very little research has examined the relationship between energy taxation and actual greenhouse gas emissions. This research is important because ineffective policies not only fail to meet their climate protection objectives, they also impose non-productive costs on businesses. Further, research has not addressed how energy taxation may be related to the choice of different emission reduction strategies. Emissions may be reduced through efficiency initiatives, whereby entities take action to use less fuel per input, or through effectiveness initiatives, whereby entities seek to use fuels with lower carbon content. Efficiency initiatives may be faster and less expensive to implement, and may be as simple as turning down the thermostat. Effectiveness initiatives potentially require larger investments to obtain alternative energy sources, such as installing wind turbines. A unit of energy produced by a wind turbine has a lower carbon content than the equivalent amount of energy produced by burning coal. These changes may take more time to implement, but they may also have longer-term benefits. The EU has been actively working to develop more effective environmental policies for over 20 years, so this is a rich data set. We examined the relationship between energy taxation and carbon emissions in the EU between 2011 and 2019. We limited our analysis to the time period before the economic upheaval of the 2020 COVID pandemic. Taxes, when implemented effectively, can be a powerful economic incentive and are an important policy tool available to governments to motivate behavior. While energy taxation may apply to any greenhouse gas, the majority of energy taxes target carbon emissions because carbon dioxide has the greatest impact on climate change. A carbon tax levies a charge on each unit of carbon dioxide emitted that is subject to the tax. That means the carbon tax increases the unit cost of fuel based on the carbon content of the fuel. This should motivate businesses to be more efficient, reducing the amount of fuel they use for a given purpose. They might, for instance, turn down the thermostat. The more fuel they use, the more tax they pay, and the higher their costs. Increased production costs either must increase the price charged for the goods or else reduce the profit margin on goods. Changing price structures impact the competitive position of goods and services within and across companies. Firms with higher emissions will find themselves at a competitive disadvantage relative to firms that create less pollution, pay lower taxes, and thus have lower production costs. Carbon taxes should also increase the demand for energy sources with lower carbon emissions per unit of power and motivate an effort to substitute energy sources that produce fewer emissions for those with higher emissions, such as converting from coal to solar. Increased demand for energy sources that produce lower emissions should create incentives for the development of more effective energy sources and for technologies that produce lower emissions per unit of energy. Carbon taxes are easy to implement in that they can build on an existing tax system. Because an infrastructure for taxation is already in place, monitoring and enforcement costs should be minimized. Carbon taxes should also be relatively predictable. Because the purpose of incentive-based systems is to internalize environmental costs so that they are incorporated into the decision-making process of users, predictability of costs has the potential to improve decisions. Further, energy taxes can be imposed on both small and large polluters. So why might a carbon tax not work? How high should the carbon tax be? Both the appropriate tax rate and the cost of harm from emissions are difficult to estimate, and in practice, the tax rate varies across and within countries and over time. Some fuels, such as gasoline and diesel products, have sometimes borne high taxes because people aren't as price sensitive to energy prices, so taxing them can be a strong source of revenue. People are often willing to pay whatever it takes to obtain energy. In other instances, significant resistance to the imposition of carbon taxes had led to relatively low tax rates and has made raising rates difficult and has resulted in exemptions for many energy-intensive exemptions. Throughout Europe, a relatively low carbon tax has traditionally been applied to coal, and fossil fuels with higher carbon content have often been subject to lower tax rates than those of more carbon-efficient fuels. Additionally, large emission-intensive sectors have been exempted or subject to reduced rates or other tax breaks, and competitive pressures have frequently caused policymakers to give exemptions to sectors that would have faced restructuring and downsizing, while sectors with minimal emissions tend to face the highest rates. To the extent that tax rate may vary across jurisdictions, there may be incentives for companies to move their production facilities to minimize or avoid energy taxes as opposed to minimizing their emissions. Adjusting the rate as new information becomes available is important if the tax is to be optimally effective. Further, even when tax rates are adjusted, the size and direction of the change in rates may reflect political choices about taxation rather than an attempt to optimize the tax rate relative to the desired policy outcomes. These variations in the implementation of the taxes and the tax rate potentially threaten the effectiveness of tax policy in incentivizing reductions in emissions. So while theory predicts that carbon taxation and carbon dioxide emissions should be inversely related, this relationship depends on the tax being higher than the cost of pollution abatement. Given the political resistance to energy taxes, the number of exemptions to such taxes, and the difficulty in determining the optimal tax, the effectiveness of an energy tax policy cannot be assumed. In our study, we focused on a particular measure of carbon dioxide emissions, overall carbon intensity, which is defined as metric tons of carbon dioxide per monetary unit of activity. Furthermore, overall carbon intensity can be decomposed into carbon intensity of the energy supply, which is the total carbon content of energy used, which is our effectiveness measure, and energy intensity, which is total energy consumption per unit of gross domestic product, which is our efficiency measure. Overall carbon intensity. We tested the relationship between energy taxation and overall carbon intensity, and we did find a significant inverse relationship between the energy taxes and the overall carbon intensity. Specifically, a 1% increase in the implicit tax rate on energy is associated with an actual decrease in overall carbon intensity of approximately 0.18%. We expected an inverse relationship between energy taxation and the carbon intensity of the energy supply. This relationship was not significant. We also expected an inverse relationship between energy taxation and energy intensity. Our analysis confirmed this expectation, and we found a significant inverse relationship between energy taxes and energy intensity. Specifically, a 1% increase in the tax rate on energy is associated with a decrease in energy intensity of approximately 0.28%. So our results do demonstrate a significant relationship between carbon taxes and carbon dioxide emissions. This indicates that carbon taxes are indeed a potentially meaningful policy initiative. However, when overall carbon intensity is broken down into the two component parts relating to effectiveness, which is our carbon intensity of the energy supply, and efficiency, which is our energy efficiency metric, we find that energy taxes have a significant impact on efficiency, but not on effectiveness. This is a concern as energy effectiveness, whereby fuels with lower carbon content are generally used, requires medium and long-term initiatives if policy goals are to be met. The significant relationship between energy taxes and energy intensity is important because energy efficiency, whereby less fuel is used per unit of output, can often be accomplished with immediate conservation measures such as better temperature control and reducing waste. Longer-term reductions may be realized by actions such as re-engineering manufacturing processes to use equipment that's more efficient. Further, reductions can be realized by such things as upgrading heating and cooling equipment. Temperature control may account for 38% of a building's energy usage. HVAC systems more than 10 years old are generally significantly less efficient than newer systems, so these actions do seem to be motivated by energy taxes. While these initiatives are important, they are inadequate to meet longer-term policy goals that necessitate the development of low-carbon energy sources. Continued economic growth requires increased energy usage, and long-term reduction of carbon emissions requires the development of energy sources with lower carbon content. While other policy initiatives may be motivating increased investment in low-carbon energy sources, the non-significant relationship we found in our research between our effectiveness metric and carbon emissions indicate that the carbon tax does not currently appear to be motivating these investments. So while energy taxes are motivating desired behaviors, they are more closely related with efficiency metrics rather than longer-term carbon abatement initiatives. So we found this very interesting, and I hope that it was interesting to you as well. Thank you.